James, good morning. Good to see you.
Good morning. Great to be here, Sarah.
So the quarter looked strong on all fronts. And what may be the most surprising is that given some of the issues out there, like inflation and slowdowns, you've maintained guidance. Why are you confident in the outlook given all these headwinds?
Well, we're very confident in our outlook. We're coming out of 2021 with good momentum. We've got a strategy that's working for us, a plan that's working for us, as demonstrated with a really good first quarter, strong results on the top and the bottom line. And what we see in the downhill is a whole series of factors. Some are headwinds, some potentially tailwinds to the numbers. So we see it as a more complex, volatile outlook, and we've got to manage through it. And remember, in the downhill, the conflict in the Ukraine is going to net out of the numbers, and so that'll be there in the downhill. But we're confident. We got a plan. We're focused on the things we control. We just see a wider aperture of potential things coming at us, and we feel confident for the year.
Well, let's talk through some of them. On inflation specifically, you feel it on commodities, you feel it on transportation. How much pricing power do you have? Because a lot of the sales beat was driven by price. Volumes rose as well. But how much more room is there to raise prices in this kind of environment for consumers?
A couple of things. Firstly, we're benefiting partly by the reopenings of the economy and the away from home, which is a kind of a positive mix effect for us. So there's a bit of a tailwind from that. And then in terms of pricing, our approach is simple. Look, we've got to deal with the commodity increases, with the logistics increases, with the wage increases. We will ultimately need to pass those costs into the marketplace. But our philosophy is to earn the right to price, to make the pricing of our products and our brands palatable to the consumers and to the retailers. And so we invest in our marketing, our innovation, our execution, and particularly in providing packaging options that provide a wide range of price points so people of all pockets can find their way into our franchise. It's a multi-factor approach to earning our right to price.
But in the U.S., for instance, the consumer has been strong. Do you see any resistance to some of these higher prices in basics? Is that coming?
Clearly a lot of people have been taking price in the U.S. You look at the U.S. marketplace, food and beverage inflation broadly is starting high this year. It was high last year. Actually, it's only been above 4% twice in basically the last 20 years, last year and 2008. I think it's likely to be this year. There's not been a big consumer pullback yet, although some of the poor income groups definitely are feeling the squeeze on the real income. And I think as we look ahead, history would tell us that it's unlikely this will last forever and that there will be elasticity in pricing. So we're very much focused on doubling down on earning our right to price and making sure we have affordable packaging options for when the squeeze on real incomes does start to put pressure on the consumers.
What about China? That is the worry du jour for the market today. James, I know the numbers were down, started off the quarter well, and then we started to see the lockdowns. What are you experiencing from a production and a consumer demand standpoint in China?
Yeah, clearly has changed a lot in China in the last couple of months. We started very strongly in January with Chinese New Year, and then by the time we got to March, it was negative, and the quarter ended negative. Strong lockdowns in Shanghai. In simple terms, it looks very much as though we're back in April 2020 in terms of consumer mobility, lack of openness of a lot of the channels, and having complications, with the supply chain. But the good news is, we've learned a lot over the last couple of years of managing our way through these lockdowns. So we don't expect to be as dramatic as it was perhaps in the early years. Or the early months of the pandemic, but it is clearly going to impact the business as long as the pandemic continues out there in China, and certainly that's the direction for the near term.